for the first $500,000 of profit or so, you shouldn't even consider going outside of land. Once you have something working, I think investing outside of it at first is going to be one, a distraction, and two, you put all this time into building your skills.
I mean, we've done a poor job, like a less than ideal job on some of our rental properties because it's like just balancing time, and property managers are not like...
Got to manage them for sure. And that's why it is a distraction. Every single decision I make isn't about how much money I can make. It's like, for example, we're building a pond and cabin and all that stuff on the land right now from media. You think we're going to get a return on that?
No.
That's what I mean. But it comes down to a lot more than just money is what I'm saying. And you have to understand, like, what do you want to be remembered as? What's your mission? There's a lot more to it than that. Hey everyone, welcome back to the Real Estate Investing Podcast. Today's topic, we're discussing what to do with your land investing profits. I'm your host, Daniel Apke, joined again by my brother and business partner, Ron Apke. And we get this question a lot, like investing inside your land business versus outside. And in this episode, we're going to talk about what kind of profits to expect, what to do when you get to certain levels, when to start investing outside of land, and when you should make that turn. But welcome back, Ron.
Yeah, happy to be here. I think this is a good topic with a lot of people the last few months, like been a lot more quitting their job stories. So I know they're they're obviously making money and then thinking about where to kind of put it. It's an important thing, and there's strategies for more long-term wealth versus trying to build cash right now. So I think we can get all into that today.
Absolutely. And I think we can start with, what to expect profit-wise. So you start your land investing business, you're bought in, you're sending mail, you're sending text, whatever your marketing strategies are, and you start making a little bit of money. We can talk about what to expect in that avenue, when to start expecting returns. And a lot of our users are probably already making money, so we can discuss when to make that transition later on. But say you just started, survey hacking. You're making a ton of money survey hacking. You've figured out something that works. You're making hundreds of thousands of dollars. But let's just talk about what to expect profit-wise in this business for your first 90 days, 6 months, a year, 2 years, things like that.
Yeah, I mean, it's obviously a big scale. Like, it's not
from $0 to $1 million.
Exactly. We've had people who are doing $600,000 profit their first 4 or 5 months versus people who obviously didn't do anything. They didn't take any action. We don't really need to talk about that part of it today. But as far as the people who are making money, I mean, it's a huge range. And I think a lot of it's like when you're reinvesting, it's your personal situation. There's so much that goes into it. Kind of like when we were talking to Michael when he was in here, our brother. It's just like so much different things go into it.
Yeah.
But I don't know, first 6 months expected profit. Like if you do things we teach, I think you should make $100,000. Like I really do think you should make $100,000. Maybe there's maybe $100,000 net or gross profit, and after expenses, 85, 80. I've heard that number quite a bit first 6 months, and then it really ramps up. I don't know what your thoughts are, but if you're doing everything we teach, like that's what it should be around.
Yeah, there's such a wide range. I don't want to get into the specifics. There's people there's no reason you can't make more than $1 million a year in this business if you're actually committed and scaling and doing all that, and your commitment level's high with your execution. But that's not what this episode's about. This episode's about reinvesting your profits. And I think at first, for the first $500,000 of profit or so, you shouldn't even consider going outside of land. It's like once you have something working, you want to throw more gas on the fuel. The land flipping business is working for you. You're buying, you're selling, you're survey hacking, you're getting all this profit back, and it's working really, really well. And I think investing outside of it at first is going to be one, a distraction, and two, put your money where you know it's working. You just built all this experience. You put all this time into building your skills, and that's an asset, and you need to fuel that asset.
So do you mean putting into more marketing, putting into actual investing in your deals, everything?
Everything. Invest in your own land deals, fund other people's deals. You know how to analyze now. More marketing, up your mail from 5,000 to 20,000. More text, more resources, hire people, outsourcing, more of the systems behind it, everything that goes with that, and buying your own properties when it makes sense.
It's such a natural thing, I think, to get distracted when something is working and like not taking something to the next level. Because building a $500,000 land business isn't the most difficult thing. Building that to a machine that's doing $2-3 million a year obviously is going to take more, and that's like that next step. And I think naturally people like look for the next thing or look for a distraction when they start to be successful in something, whether they see a multifamily opportunity or they see this and they don't really understand the amount of time it's going to take for one, the distraction of energy it's going to take from them, and every ounce of energy you have towards something else is taken away from land, which is something, like you said, Dan, is something that worked for them in this situation. So I 100% agree. As far as like, I think it's more the time and the energy being elsewhere opposed to the money being elsewhere.
Yeah, I mean, a lot of people I hear are making $75,000, $150,000, let's just say $125,000 off of land. And then they're like, oh, how do I reduce my taxes? How do I do all that? Where should I put my money in stocks? All this different stuff. But really, that's just a distraction until you hit $500,000 or $400,000 or something. When your tax bill is over six figures, then you can start worrying about that. But if you're only making 75 and you just started 125 and you just started, double down on land and get that 125 to 400 or 125 and double that to 250 the next year. And I think there's a lot to just putting it in and trying to double your own business instead of worrying about taxes and where can I put this money and finding another real estate opportunity. It's like, this is working. Let's double this first.
The people who like are doing the best, like if you just think about the people doing the best, I'm not going to name any names in our community, students, everything like that. Like it's the people that are head down. Like, okay,
blinders on.
Exactly. Like they don't see other stuff. They don't listen to other stuff. There's so many distractions you can kind of have. There's so many distractions out there. But like Dan said, like blinders on. One of the people we talked to, he's like, I don't listen to any podcasts. I don't listen to Bigger Pockets anymore. It distracts me. Like land investing podcasts is all I listen to. And he was very, very big on that because the intrigue of possible distractions, he just eliminates that. Like if you're trying to get rid of alcohol, like don't be around alcohol all the time.
That's true.
So it's just a simple thing, but it costs people so much money, distractions it's just a fact.
Yeah, your business is going to slow down tremendously as soon as you hit that. And then you start looking, it's like I was talking to our new employee today about what was it? RVs on land and putting RVs in electrical units and all that. Yes, that business model will work great. You can make a lot of money doing it, for sure. It's a niche, though, and it's going to take away from something else. So if you want that business model to be your business model, go for it. But you just got to be careful. And it's the same exact philosophy. Hormozy always says it, too. You know, take your business to where you want it to be before you start your next business. And distractions. And you look at the most successful people in the world. Mark Zuckerberg had no distractions. Bezos had no distractions. They did eventually, and then he started working on side stuff. But you look at them making it, it's like they were very head down, focused on their mission. Same philosophy applies everywhere. You'll make more money in the end. I know it sounds good to buy a bunch of real estate at first, and we still do it, and we're going to get into that. Buy a lot of real estate assets in terms of structures and mobile homes and things like that. But it sounds really nice. But you're going to make more money doubling down on what you know first.
So one thing I think people are going to ask naturally, Dan, at least people who have watched us quite a bit, we started a land investing company, obviously. Then we started an education company, and then we started a software company, and then I had
drop shipping and Kindle and all that too before.
And then we have multifamilies at the same time, and then we just bought a drone company. Like, what did we do? I don't know. Like maybe if we only focus on land investing, like we would probably have the most cash. Like I would imagine. Right now we're building assets with droneries. We're building assets with the land portal.
It's more about the mission.
Okay. For those other things and the combination and the
it's more about
portfolio.
The mission and for sure I would make more money if we just had a land investing business, without a doubt. We'd have a lot more money. We'd have cheaper investors. We'd be getting deals left and right. I think 100% that's accurate.
Yeah.
Do you agree?
Yeah, 100%. I think the mission started with land investing online. Like it was working so well for us, and like that mission and like the first people we had that were successful. Like there's Jenna who's from our high school. Like how much success she's had. It's cool seeing people that like and how much success, and then it kind of kept on growing, word of mouth, all this stuff. So is that
it's what you're trying to do? What do you want to be remembered as? Like. Yeah, making money wise, every single decision I make isn't about how much money I can make. You know, I would have gone a different route from what we did with all of this. A lot of this stuff's a money pit, you know, in terms of maybe in the future it's not going to be, but a lot of these different things we do are, it's like, for example, we're building a pond and cabin and all that stuff on the land right now for media. You think we're going to get a return on that?
No.
That's what I mean. But it's fun and it's a part of our mission. We're trying to entertain and teach and educate. So it comes down to a lot more than just money is what I'm saying. And you have to understand, like, what do you want to be remembered as? What's your mission? There's a lot more to it than that. Like I wanted to be in the education space and help other people reach that freedom.
So from your perspective, like people who are in land, they're trying to avoid distractions right now. Like most of those people we're talking to, I guess, are people who are trying to get out of their job. They're unhappy in what their 9 to 5 is, I guess. Because some people do have a bigger mission for sure. I don't know what question I'm trying to ask here, but like the people who are trying to avoid distractions, but they also want to do something else at the same time that may be a bigger
Wait
purpose.
until you want to get this to where it is still.
The financial,
like get this, because we were in a spot where I was comfortable with.
Yeah.
We had millions of dollars of profit. And it's like, all right, it's not like we started land education after doing $400,000 a year.
Yeah.
You know what I mean? There's a big difference. And I know a lot of people in the land education space are making $200,000 a year and then or $100,000 a year and then they start their business. We are the opposite. We built that solidified. We had it outsourced. And we're at the point where like, we got way too much time. We're both doing this full time. I sold my business. It's like, what do we do now? You know? So it was too much time. And we always knew we wanted to do more than that in the end, but we got it to where we wanted and we were making millions.
And we outsourced so much initially. And that's where, if you guys are at the spot where you're doing yourself making 500, okay, how do you do it with half time, as much work? Yeah, less time, outsource some of it and still make 500 profit or whatever it is.
And then you can pursue your passions and your other stuff or start your marketing business, whatever it is.
And that's what we did. Like Dan said, like capital wise, like cash wise, we'd have the most money if we put 100% of our effort into buying and selling. I saw that look you had
when I just told you that. You're lucky that you're like pondered like shit. Why don't we just stay with that?
No, I mean I love what we do now. It's fun. It's fulfilling, like you said. So like I don't have any regrets as far as that building.
I saw the money sense in your eye.
Yeah, I mean you definitely think about it. I think like, but we're getting so many deals from members. Like we're helping so many people. So, but yeah, you definitely look at it. I think like how much. It's so easy to make $1 million in land.
Yeah.
Like it really is. Selling data and all that
stuff.
I mean,
with
like
subdivisions, if you just focused on that 100%.
Yeah. But yeah, I guess let's get into, Dan, like the actual reinvesting. So when is the right time for someone to reinvest? I know you just said like you've outsourced some, you have more time. Well, I think like you said, reinvesting in members' deals, like for these people, like trying to fund other people's deals. If you want
your deals first though.
Yeah, exactly. But if you want passive money or something like that, like you know the asset better than pretty much anyone else, reinvest in the asset. But we can go past that to like, okay, now they're making $1 million a year. They've outsourced some. Where should they be going?
Yeah, but real quick before we hop on that and what we're going to talk about, but the 4 things you should be reinvesting in before you invest outside is, like I said, I just want to reiterate this, is your marketing. So getting more leads, figuring out funnels, trying new funnels, spending a lot of money and time on marketing. You should reinvest them in your deal, so you're spending with your own cash some money once you get comfortable for that. Not on every single deal. You can raise money and all that as well, but you need to be buying some of your own deals. And then your infrastructure and employees.
Yeah,
infrastructure, your systems, all that stuff, but most importantly and also most expensive is employees and virtual assistants overseas, in-person, transaction coordinators, whatever you decide. Those things you need to dial down before you look outside. So we hit those boxes. We're scaling. We have a lot of time. You got to where you want. Now where do you want to invest is what we're getting into, Ron, right?
100%. And employees are the toughest thing to like reinvest in. 1, because it's like a mental hurdle, I think, hiring someone. And 2, it's a huge time commitment up front. Like employees are, the amount of time goes up so much, like your time at first, because you're training. You want to make sure they're doing the right things. And then it kind of dies down as they become more independent. They can do things themselves. But yeah, reinvesting outside of land, I mean, there's obviously like safer options. You have stock stuff. If we're talking like safer options, that stuff, you have high interest banks, which I know we've done a lot of, where you can kind of keep your money. But as far as real estate, you need to get your tax bill down, Dan. Once you're making $1 million a year, you're going to have a $300,000 tax bill. You need to find solutions for getting that tax bill down. Physical real estate is the best way to do it.
Yeah, physical real estate's where we put it. So like if you're just looking at our portfolio, I do have a lot of stocks. I have a lot of crypto, but I have a lot of real estate. Real estate takes up majority, and I'm not just talking land. I'm talking rentals, and we just bought 2 mobile home parks, things like that. You got to look in real estate because real estate has bonus depreciation. Bonus depreciation wipes out your tax. You do this full time now. You have to qualify. So look up the qualifications. You have to do real estate, be a real estate full-time professional in this many hours a year. But once you have all those, you got to get bonus depreciation 100%. That's your way to eliminate your tax bill. It is going to be work. You do have to find a deal yourself. You don't get as much tax incentives from syndications and things like that, which we've done syndications and stuff as well. It's your money's not as liquid, and it's there's pros and cons of it. You don't need to do any work though. But to really get your tax bill down, you have to manage the actual deal and take it down, which is some work, but you will eliminate a lot of your taxes. Real estate in general, whether it's syndications, getting your own deals as a GP or as an LP, whatever it is, there's so many tax incentives. Even if you're just getting little fourplexes, duplexes, 8, 16 units, big write-offs, big tax incentives, good long-term investment in general.
Yeah, I mean, to give you guys like a breakdown of what you can do, like a $1 million mobile home park, you're going to put $200,000 down, 20%, give or take, maybe 25. But let's say $200,000 you're going to put down. If you made $1 million, you're going to owe $300,000 plus in taxes. But you put 20% down, you put $200,000 down, you're going to get, with bonus depreciation, you're going to get anywhere from 40 to 50%. You can get 50% on some mobile home parks, right? As far as depreciation, you're going to get a $500,000 write-off on the $200,000 investment you put in, because it's 50% of your purchase.
You don't need
price.
to put in any money if you don't want.
Yeah, exactly. If you get
based
money,
on your equity.
I don't know as much about that as that stuff.
Based on your equity.
Is it based on equity? Okay. So yeah, if you don't put any money out and you have 50% of the property and you get people bringing money, that's a whole business though. So that's what I want to be kind of careful with, because that is like a business in itself.
That's what I mean. That's what you got to manage.
Managing a mobile home park.
That's why these fourplexes, eightplexes, single family duplexes are really good too, because they're so easy to manage. Like you start getting into these mobile homes and big part, like it becomes a whole business. But what I do recommend, if you can find someone who knows what they're doing to, manage the whole deal for you, they're real estate gurus and they know what they're doing, and they can attack the deal, take it down, manage it, and you put up 100% of the money, and you give them equity, essentially 20, 30%, whatever you work up with, 20%. You have $1 million place and offer someone $200,000 off the rip plus 20% profit and everything, you're going to get a lot of people interested.
100%. Like you can get, it's not that hard to get investors for stuff with all this. You just got to prove that you can.
No, but GPs are hard. People that actually manage it, difficult, because you want someone that knows what they're doing.
Yeah. And that's where there's so much risk in it being done poorly.
And single families is obviously the easiest to manage.
Yeah.
And then it kind of goes from there.
I saw a video the other day of someone who flipped a hotel. It was really run down. He flipped it. He renovated it. It was probably like 3 years ago.
Yeah.
And then he's going to buy it again because they just destroyed it after he sold it.
It happens. It's
he made like $5 million on the sale.
Yeah.
When he flipped it, and now he's going to get it again for basically what he bought it for initially, because it's all boarded up, like it's gone.
Wow.
So if you're not managing something, kind of like, I mean, we've done a poor job, like a less than ideal job on some of our rental properties, because it's like, time is just balancing time, and property managers are not like they're not bulletproof. They're not going to do everything.
You got to manage them for sure.
100%.
And you got to audit their numbers and audit what they're doing and look at the reports and look at what their satisfaction is of the tenants. And it's work. Like it's always going to be work. And that's why it is a distraction. But once you have a good 6-figure tax bill, it's usually worth it. If you want to be less time consumed, I think, than buying it yourself, you have to look for partners or syndications or general partners in general, and put money up and then be a limited partner in a deal. Lots of different ways to do that in real estate, and you still get some good write-offs and things like that, because it is still real estate classified, and they'll give you a K1 with all that stuff. But other than that, I mean, it's basic stuff, like whether you like stocks, the crypto's the big thing now. I have a lot of crypto. I have a lot of stocks, like I said. What else is there? The cash yield. That's one thing. Actually, let's touch on that. The high interest cash savings account.
Yeah, I mean, there's so many out there, but you should be getting a normal savings account's going to be 0.025 or something like that. You can get 5% banks that are pretty liquid. Like they are
5% interest banks right now.
Yeah.
Very, very liquid. You can wire in and out very quick.
You can wire out of there?
Yeah, I do it all the time.
Yeah, so yeah, I mean that's you can get it out of there in a couple. Wire? You mean wire, or just like transfer out?
I think I wire it out of there.
Yeah.
I call them and they wire it for me.
Really?
They send me a little, it's a little, they do send me a wire sheet, and then I fill it out and send it back, and they get it out right away.
Yeah.
It's very, very liquid.
Yeah, I mean, if you have money sitting, like you should have, it's in something like that, unless something can come up on like
there's no risk.
Yeah, 100%. It's a bank. They have $250,000.
If you have hundreds of thousands of dollars sitting in cash, put it in there and you'll get $1,000 to $2,000 a month.
Yeah. Yeah, I put it in there. I didn't do it for the longest time, and you kept on bringing it up to me. Then I did. I'm like, oh my goodness.
It's
Like,
nice.
yeah, it
Seeing
just
those little
adds
checks,
up
it
and it
goes
just goes
ding,
up.
ding, ding.
Yeah,
Yeah.
exactly. So that's an easy thing, I think. I think at Hold In, you just like long-term equity, like you need to balance what you want. Like, are you trying to get cash now? Or are you
Hold
trying
land too.
Yeah, exactly. Holding land long-term, like put money in what you know for sure. And then trying to get your taxes down is important in a business like this because it is so highly profitable.
Yeah, and of course, we're very heavily invested in real estate, so we're going to be very biased towards real estate. We do own other asset classes. I continue to own others, but that's just whoever's listening. We're not financial advisors. We're just real estate investors, and we have some other finances on the side. But it works for us.
100%.
And putting your money into what you know, whether you're a land investor or you're flipping couches on the side, putting your money back into what you know is always going to treat you better than not.
You know what people always say in these type of episodes? I think I saw a comment on a YouTube live maybe the other day or something, but they always say it's a good problem to have whenever we're talking about reinvesting profits because we're talking about profits. But in reality, like anyone,
it is
can
a good problem to have.
100%.
That's why I don't like people to worry about their tax bill right away.
Yeah, exactly.
It's like make more money. Tax is a good thing because you're making money.
Yeah, it doesn't matter if you're at $0 or $100,000. It doesn't really matter. Like you can get to that next level, and that's what we try to kind of teach and do, and that's why we have so much free content out there. I don't have much more to add though, Dan.
All right, cool. Think we're good to go, guys. As always, thank you for joining. Please like and subscribe our YouTube channel. If you're listening on Spotify, leave us a comment, like the episode, like our channel, and subscribe. As always, guys, thank you for joining. We'll see you next episode.
Thanks, guys.
As always, thank you for joining. Please do us a huge favor and like and subscribe our YouTube channel and share this with a friend. It really means the world to Ron and I, but more importantly, it could help change the life of someone else. Thanks for joining, and we'll see you next episode.